Hello friends, good to see you all on another video. Today we are going to discuss about commercial credit notes. What is this all about? We know what is credit note. What is a commercial credit note? Why it is required? What is the point in using this? First of all, this is one credit note without any tax commitment. There is no tax adjustment in this credit note. Primarily, it is issued not to affect any tax liability. It will not reduce my tax liability. It will not reduce the person who is accepting it his input tax credit also. It will not reduce it. So this is the advantage of it. In that case, everything can be issued like that only, right? People will be happy to know about it, right? Not that way. Let us discuss one by one easily. There are certain pros and cons for this. When I say something on pros, first of all, the main point is there is no tax liability. This point is very clear. Number two, there is a flexible timing for the normal credit note under section 34(1). There is a time limit, but here it is not like that. You can do it later also, subject to auditor's approval. The usage is also flexible. For an example, it can be used conveniently. There is no need to have the norms. So usage is flexible. It actually simplifies accounting. There is no question of reversal of liability. There is no question of person accepting it to reduce his input tax credit. All those complicated entries will not be coming. So commercial credit notes certainly has got some advantages. But can we use this in all the places? No, it cannot be. Then we need to see the cons also. In certain cases, we have to reduce the liability. I am passing a credit note. Naturally, I should have a benefit over it. I have already paid the tax. So I need to reduce the liability. In that case, this commercial credit note will not work. Definitely, there will be audit scrutiny for every commercial credit note issued. There is a challenge in it. You need to prove its worth. There is a possibility of price reduction. There is a possibility of incentives. There are so many other aspects. Post-sale discount, all those things can happen for the commercial credit note. But you need to prove it, why it is given. It is not just to write off your bad debts. It is not that way. Primarily, it has got no impact in the invoice. See, the problem we have is credit notes are based on the invoice only, but this has no relevance to the invoice. There is no impact on the invoice. Here it is too dangerous. Ultimately, one important point we need to understand is we must have a proof why we are processing it. Mostly that may be rejected by the department, saying that this is not enough. So definitely we need to have a concrete proof why we are processing this credit note. One biggest advantage we have is this credit note need not be reported in GSTR1. This is biggest advantage. This credit note need not be reported. This we need to account only in accounting of both companies. There is no requirement for reporting it under the GST return. Commercial credit notes need not be reported to the department via GSTR1. CBIC has issued Circular 251 of 2025, 251 of 2025 GST, where they have given a lot of ideas. They have thrown certain views on it. That will be a top guidance for this purpose. Why it is required? When you don't want to recover the tax amount, then it is required. It is not a structured way of looking up, then it is required. Certainly, there need to be an incentive that need to be paid to maintain the business. It is required. Only problem is you need to justify it why it is required. Ultimately, what we need to know first is post sale. Some discounts we want to give. Yes, we can give. Number two, it will be working as an incentive. Yes, fine, we can give. There is no need for a tax liability. Yes, possible, we can give. There is a market rate protection. For that it is required. Yes, it can be given. Target based incentive. Yes, it is possible. All these are the very important or crucial factors. But again, I am telling you, you need to have sufficient proof. Ultimately, what we are trying to do is creating a fantastic proof for your commercial credit note. What are the proof for what circumstances? It is a question. We are here to help you in this regard. We can discuss about this. We can come to a conclusion. We will help you to process it safely. Now, before closing it up, I would like to put couple of points here. One is A sold goods to B, B sold goods to C. Now B wants to incentivize C, but he said A to pass the commercial credit note on C. Is it possible? You can give your comments, you can give your answers with the reason why it is possible or why it is not possible. Click bell icon, like our channel, subscribe our channel. We are here to help you. Please contact us. We'll see you in the next video. Thank you.